We do believe when the SEC approves a spot Bitcoin ETF in the US, and we think it's close, and we hope to be among those approved, that will be key. That will be a seal of approval for institutions to diversify into a new asset class.
Cathie Wood gives us an update on the pending Bitcoin ETF approvals, which could be as early as January 8th. Cathie's bullish prediction for Bitcoin's value as an asset class will surge from $700 billion today to $20 trillion. That's over 30x the current value, and will place Bitcoin's price at over $1 million. The SEC is actively reviewing multiple applications for this ETF. Thanks to BlackRock's significant influence, there's an increasingly strong belief that, in the not-too-distant future, we'll witness the approval of at least one Bitcoin spot ETF. This would mark an historic milestone for the Bitcoin community, a moment many have been eagerly awaiting for well over a decade. ARK Invest CEO Cathie Wood highlights the decentralized and transparent nature of the Bitcoin network, making manipulation highly unlikely. Let's get right into the interview with Cathie Wood. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel.
We think in the crypto space, for example, there are three revolutions taking place: a money revolution, a financial services revolution, and a digital asset property rights revolution. And they're all big. The biggest one, though, is the money revolution. That's Bitcoin, because it's the first global, digital, decentralized, private, no government oversight, rules-based, critical monetary system in history. We think that's a $20 trillion idea by 2030. And right now, I believe Bitcoin is valued in the marketplace at roughly 700 billion, something around there. So that's a very big idea. And many people in the developed world don't understand how big it is because they are not growing up or living in an emerging market, which is going through hyperinflation and which is destroying purchasing power and wealth. So it's really taking root there, with the exception of the regional banking crisis. And something very unusual happened during the regional banking crisis to Bitcoin and to other crypto assets. Typically, Bitcoin and crypto generally are risk-on assets. You know, they tend to do very well in an overall bullish environment. What happened during the regional bank crisis, we had the regional bank index here in the United States imploding. We had banks going bankrupt, and Bitcoin went up from 19,000 up nearly 50%. And we thought, wow, this is proof positive that Bitcoin is also a risk-off asset. What does that mean? It means there's no counterparty risk, unlike in the banking system. We've got a very decentralized, transparent network. You can see all the activity taking place by IP address, no counterparty risk. So a very big idea. Now, artificial intelligence has taken a lot of the oxygen out of the room in terms of discussions out there. AI is the biggest catalyst to all of the innovation taking place out there right now. So we have centered our research and investing around 5 major innovation platforms. They are robotics, energy storage, artificial intelligence, blockchain technology, and multi-omics sequencing in the life science space. We have a scoring system that measures which technologies are the biggest catalysts to the accelerated rate of growth of other innovations. In other words, there are convergences taking place between and among technologies. AI is the biggest catalyst. It scores, top of the heap. And we think that every company will have to harness it or lose out competitively, either cost structure wise or new products and services wise. The other side of this is trying to figure out who are going to be the biggest beneficiaries of this absolute boom in innovation. And we think the biggest opportunity out there in the next 5 to 10 years is autonomous taxi platforms. Many people call them robo-taxis. And we think that could scale from essentially nothing today to an $8 to $10 trillion revenue globally, including China, in the next 5 to 10 years. And I know a lot of people say, no way. You see Cruise Automation, or Cruise here in the United States, owned by GM, had to basically shut down its autonomous, and GM's pulling away. This often happens with new innovations, and you see players who should stay in the market pulling out, just saying this is never going to happen. And then all of a sudden, it happens and they're not there.
Cathie Wood also discusses the widespread anticipation of the Bitcoin ETF with investors, emphasizing the importance of digital wallets. The crypto community eagerly awaits further developments, as these analyses and the SEC decision on the Bitcoin ETF are likely to have significant impacts on the market's direction in the days and weeks ahead.
We think Tesla is the biggest, performing the biggest AI project in the world. And we think it's in the pole position here in the United States to get what will be a winner-take-most opportunity in the robo-taxi space. And the interesting thing about that is that will redefine how people think about Tesla. Right now, they think about it as an electric vehicle manufacturer. That's a low-margin business. It's in the gross margin category. It's some players are as low as 10 or single digits in China. And we think Tesla will get on the EV side to a 30% gross margin. If autonomous is the next big play here, then that's a SaaS model, software as a service model. And the gross margins there are in the 80% plus. It will redefine what Tesla is doing completely. And so Tesla is doing what Apple did in redefining the wireless space. It developed its own chip, the only cell phone manufacturer to design its own chip. And today, it's number one in the smartphone market, computer in your pocket. The others did not define the market that way. Tesla's doing the same thing, only company to design its own chip, and it is redefining the mobility market into autonomous mobility. Technology is collapsing. If you look at artificial intelligence, AI training costs, they're dropping 70% per year. And just to put some color into that, if ChatGPT if that model had been developed in 2015, 5 years before it actually was, it would have cost about $500 million to develop it. In 2020, when it was developed, it cost only $4.5 million. Today, it would cost $200,000 or less, and the costs continue to fall. So the other thing that's happening with AI in particular is we're talking about large language models and natural language processing. All of us can do that. All of us speak natural languages. So we all could become prompt engineers if we just prep a bit and use platforms like Replit to help us program. Replit does 80% of the work with artificial intelligence itself. So I think access is going to increase. And this network of VCs funding, the companies in the Valley, that is going to be an old model. There are innovation centers springing up around the world. We moved to St. Petersburg, Florida, 2 years ago because we saw that it was a fertile place for innovation. And we wanted to make a difference and attract tech companies there. And that is happening. It's happening all over the US. It's happening around the world. When I visit the world, there's such an appetite to learn about innovation, and policymakers understand if they don't do something about this, they're going to be losing out competitively and leaving, high value add positions to other countries. So we're seeing, interestingly, regulatory arbitrage taking place. To give an example, blockchain technology. The US, from a regulatory point of view, has been terrible. The EU has been much better in terms of clear regulations, as opposed to the US, all muddled and confused. So a lot of talent has moved into Europe, and actually some of the products they're building, they won't even let US users use, because we live in this regulatory regime. So I think there's going to be regulatory competition, and kudos to Europe for being much clearer in that way. Europe is, though, very complicated. This is why we entered the market with a partner. The different languages, the nuances and regulations in the different countries. There may be, EU regulation, but then there's country by country. And then, of course, very importantly, relationships. So there's a lot to overcome. But again, the barriers to entry are dropping.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run right into the halving of 2024. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. Today, they'll be able to offer lower rates to savers and higher rates to borrowers. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.